Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea on a Monday, where we're waiting for comments from the White House on the back and forth that we've seen back and forth over the last 4, 5, 6 days. Part of that conversation is Anne-Marie Horton in Buenos Aires with the Secretary of Treasury. Look for that this afternoon, I guess, late this afternoon, I should say. That'll be an important conversation, to say the least. We emphasized early on this morning the efficacy of a 60-40 portfolio. Torsten Slok out with a brilliant note from Apollo on that. We were advantaged by Steve Chiavarone, a Federated Hermes, and all the work they do in equities. He was really, really quite good. Chiavarone on the moment.
We saw the 12th worst 4-day stretch in the history of the S&P last week. Well, what are the forward, what's history tell you? History tells you that 12 months later, you're higher 30%. History tells you that in the prior 11 declines...
You're higher 30% of the time?
No.
Or a lift of 30%?
You're positive 100% of the time in the last 11 instances of a 4-day decline like that, and your average return over the 12 months is 30%. Yeah, and that's the story. Politics, tariff noise, sure, they're important. Sure, they're going to impact earnings. Sure, you need to be thoughtful about them. But the story is the line goes up and to the right. Companies adapt. The economy continues to grow. We are the center of innovation. We still have working age population growth in the United States, which is unique in the developed world. And if you can stay calm, what you realize is that you've gotten a lot of pretty good value opportunities over the last week to 2 weeks, and you need to take advantage of those and upgrade your portfolio.
Steve Chiavarone, Federated there, with optimism on staying the course in the equity markets. Lori Calvasina of RBC Capital Markets, like all of us, squeezing 8 days into a 7-day work week. I can tell you this weekend for me and the team was really quite extraordinary. It was literally just nonstop. I'm still in that mode where I'm afraid to look at my cell phone to see what's going on. Lori Calvasina, it's harder for her. She has to publish. She has to publish on Friday, then republish the publish on Saturday, etc., on to Sunday and Monday. Lori Calvasina of RBC Capital Markets on the path forward.
I will say, if we're thinking short-term, long-term, if you go back to 2018, companies didn't really raise the alarm bell on tariffs until like September in that conference season before the earnings reporting season, kind of post-Labor Day. So it may take some time to see the residual impacts. We are seeing in company commentary indications of tariff pre-buying. We saw one of the banks call that out. And also, some of my clients I met with last week also clued me in on this, but the idea of managing your inventories and pulling forward some of that inventory. I would, we called this earnings season in our latest weekly as potentially like a box of chocolates. We don't know exactly what we're going to get. We could get some good ones.
Lori Calvasina of RBC Capital Markets. I want to point out one thing today where I believe I can say I've never seen this before. The single headline from Goldman Sachs that they will initiate some form of share buyback of $40 billion. When I saw it, I thought it was a typo. I literally thought it was $4 billion and somebody at Bloomberg messed up. Not that I've ever done that. But the answer is $40 billion is 25.2% of Goldman Sachs market cap. I think I've never seen that before. On your commute across the country, thank you for listening to us, particularly 92.9 FM in Boston, Bloomberg 1130 in New York, and particularly 99.1 in Washington. On YouTube, we're out on Bloomberg Podcasts. Subscribe, growing each and every day. Thank you so much for that. Worldwide, featured Shanghai and Hong Kong today. Thank you for listening in China. And on YouTube Podcasts, this is Single Best Idea.